Hello everyone. I'm Nihal, and I'll be moderating this session for today. So thank you all for joining on this day on the weekend. Firstly, today I'd like to start the session by talking about when we think of finance as people that are entering into finance, the first areas of finance that come to mind are equity research and investment banking because these are sort of the most highlighted parts of finance, right? But finance as a whole is a very broad segment, and most of us have no other ideas of the other functions within finance. So that's why today we have with us Mr. Rushabh Shah, who is a CA ranker and someone who's worked across EY and other giants, including Marico, L'Oreal, in various functions, and now runs his own company, which is essentially a CFO consulting firm. So with that, I would like to introduce Mr. Rushabh Shah to take us through his journey and insights and also guide us through what are the other opportunities within finance that are not so highlighted, but just as good of an opportunity for all of us.
Thank you very much, Nihal, for this introduction, and a very warm good morning to each and everyone present here on a Sunday. I personally like Sundays because they are good time to reflect, understand, and gain some different perspectives on varied level of topics. The topic is beyond equity and IB. We are here to explore high impact careers apart from equity and IB. Okay. So it's just a brief landscape. Okay, so out of all the finance professionals out there, uh, people who actually get into IB or private equity venture capital is almost 2% or less than 2%. Okay, this is broad market stats, which gives an idea that, for example, if 100 candidates are fighting for positions, only two get placed in a proper investment banking or a proper private equity or venture capital role. If it gives us an idea as to how competitive these two fields are, and at the same time, because of such a strong filter, how it becomes important for us to, from a hedging point of view, as well as to how can you focus on some other careers as well, which gives us almost a similar edge as compared to the IB or private equity players. At the same time, it gives a fulfilling, a rewarding career in life. Okay. Second stat we have is how 60% plus finance roles are in FP&A and corporate finance. This is also very important stat to showcase the demand for roles other than IB and equity as well. Okay, because if 60% plus finance roles are in FP&A or corporate finance, it gives us that idea that these roles are not some dormant or non-active roles. Because if those were dormant or non-active roles, the hiring wouldn't have been much active in these kind of roles. Okay, so business or the industry or the finance industry requires this kind of roles, requires people who can actually execute in these kind of roles. So that is the second interesting stat. And third, of course, coming from the second stat itself, 3 to 5x more job openings versus the IB globally. This gives also a lot more visibility that, for example, if out of 100 only two gets chosen in IB or private equity, the job openings that are there are almost 3 to 5x more than IB or private equity. So which gives you a broader, a more larger room for you to participate in the finance roles, and at the same time, as I mentioned, get much more visibility, get much more experience in business oriented roles, which are much I would say fulfilling than IB or private equity. When why I say fulfilling is because when we go in some of these roles, you will understand as to the expertise, the experience, the technicalities required are much more interesting, much more fulfilling, and at the same time gives a slightly better balance in terms of work life. So now we start with specific, high demand roles. First is definitely FP&A. This is a company specific role where you have to, present in a company and basically work around how the entire finance movement of a company looks like. You will probably revolve much more around P&L and the balance sheet and the related cash flows. And the fewer questions are selective, I would say, indicative questions that you would typically be asked or framed or basically need to answer is, you have to build with the financial models. You have to track actuals versus budget. So typically in every company, there is a longer budget cycle of entire 1 year, 3 years, 5 years. And at the same time, there is forecasting that happens throughout the year. So for example, let's say, for a financial year, say April to March, you start building budgets around December or January. You at max freeze it by February. And once the budget is locked, what you do is that on a monthly basis, right from April, you start tracking the actuals and how you are performing against the budget. while at the same time you keep on changing those budgets. Why? Because you need to understand that being the business environment is so dynamic that a budget that you logged in, let's say December, January, February, won't stay hold true till the entire coming financial year. Okay, so there's a lot more aspect of forecasting comes into picture, where you revisit these budgets and keep modifying and keep changing the budgets to reflect the economic realities, and accordingly then keep tracking the actuals against those forecasts. So that's a very nuanced role where you have to be interacting with business departments like sales, marketing, purchase. Keep asking that how they are seeing economic realities in their business functions, what kind of impact that will have in the overall company's numbers, and how you tweak those numbers after discussing with the relevant stakeholders, be it your senior or ultimately the CFO, and make those changes. As I mentioned, the second, that how do you actually partner with business units to explain the variance, like why did marketing overspend by 40 lakhs? So for example, if you had a budget of say 30 lakhs or 35 lakhs, why did this actual come out to be 5 lakhs more or 10 lakhs more? Then you have to take the reasons, and not just take the reason, but actually understand from the business lens as to why this spend is higher. Okay, for example, if taking the same question, why did marketing overspend by 40 lakhs? If let's say marketing team says that, for example, the performance marketing by Google or Meta has increased their charges and what we against what we budgeted, and to do the same level of marketing activities, we are required to spend more. After that, you take a call with marketing team that is there a possibility to reduce the marketing activities while not hampering the brand image or the marketing visibility of the company. Or let's say if the marketing team stays firm that no, we cannot reduce our marketing activities, then you have to speak with your finance senior and the CFO that how can you tweak your budget and allocate more budget towards marketing, so that this excess of overspend will not be reflected in the next coming quarter or the next period. Then prepare the CFO's monthly performance deck. So of course, on a monthly basis, there is a rigorous, performance deck that is being prepared by the finance teams. I have seen this happening not just in corporates but in startups as well, where startups are required to prepare the finance deck for the ultimate finance head, CFO, or a fractional CFO, whoever there is from the finance lead point of view. Help them understand what kind of finance activities has taken place, what are the challenges, what are the opportunities, are there any tweaks required in the budget from the forecasting point of view, and what are the next steps being taken for any errors or any mistakes that have happened, and how to take the finance actions back in control.
FP&A is an activity that happens inside a company, right? Just
Yeah,
every company has an accounts department, a finance department. So what you're
sure.
saying is FP&A is a separate department.
Absolutely. FPN is completely different department from accounting. For the very simple reason is that the role of accounting is to close the books on time, ensure that the
Ah,
books are accurate, and
correct.
ensure that all the accounting entries and everything is closed. So that the and once the accounting is closed, I would say to a larger extent the work of FPN starts from the correct books of accounts. Because how will they analyze if the books of accounts are itself not correct? Okay,
Makes
so
sense.
while both are separate, while both of these are separate, different roles having their own roles and responsibilities, but somewhere there is interconnection because FP&A team relies on the accounting team.
Okay, so first accounting happens and then FP&A happens. Correct?
Not to the complete 100% extent. See, the planning factor has nothing to do with the actuals. Okay, planning
Okay.
takes place on something historical. Okay, what has
Okay.
been how has been the year and how we see the business coming forward in say 1 year, 5 3 year or 5 year. Once the business actually starts or the financial year actually starts, to analyze how the plans were made and how the company is actually performing against those plans, that's where the accounting has to close. For
Okay,
example,
so you're saying FP&A has two broad parts. First is the planning phase, wherein
yeah,
you just plan of what should happen in the next 1 year, 2 years,
exactly.
and then the second phase is once it has happened, you'll rely on the accounts department, and then you will find the variance of what actually happened. You had decided marketing should spend, let's say, 40 lakhs, but you end up spending 60 lakhs. So why did this happen? Is the analysis part. So there are two wings to FP&A.
Correct. And also the lens as to how accounting and the FP&A looks at the expenses. Okay. For example, from accounting point of view, all the office expenses are office expenses. All the marketing
Correct.
expenses are marketing expenses. But when it
Correct.
comes to FP&A, they have to look at they have to dissect basically marketing expenses in different business units, different product lines, different category lines, so that they can get an accurate view as to how a particular business is performing, or how a particular product P&L is performing, or how a particular category P&L is performing. For
Makes
accounting, it's everything is at a company level. But from FP&A point of view, they have to drill down and make it much more detailed and nuanced to get a clear idea as to where the business is performing well, where is it struggling, and what kind of actions are required to make the performance of business much more better than what they had thought of.
And is this required only in listed companies or big companies, or so where do you see in your experience FP&A being used?
FP&A is used extensively in startups as low as 10 crore turnover as well. Okay, so of
Okay.
course it's obvious that listed companies have their own department, but FP&A is something that each and every startup or SME also requires, having a turnover of as low as 10 crores. Then after
Okay.
that, it definitely depends on how complex the entity is and how many verticals or channels or categories they have. But because although the word seems a lot technical and flashy, financial planning and analysis, but ultimately what we are saying is that how is the business performing across its
Hmm.
various activities, and what kind of challenges or what kind of problems are business facing, and how can we solve them from the lens of finance.
Correct. So understood. So the second part of finding variance is more related to the costing part of it, right? As in
Not,
why.
no, it's also related to sales. For example, I predicted or I forecasted that I'll be having, say, 100 rupees sale for category A, 200 rupees sale for category B. Then when
Okay.
I found the actuals, let's say if against 100, I did a sale of 150. Against 200, I did a sale of again 150. So product
Hmm.
A turned out to be better against my plan. Product B or category B was not performing to the extent of what I planned. Okay. So what are the
Hmm.
reasons? Is there a problem in terms of sales? Is there a problem in terms of pricing? Is there a problem in terms of schemes? Is there a problem in terms of distribution? What exactly is the problem that product B did not turn out to be better against my plans? At the same time, we will also understand that why product A turned out to be better, because I only predicted that I'll sell 100 rupees, but I sold 150
Correct.
rupees. What worked out in our favor so that we can double down on that favor points and actually, perform much more better. At the same time, now that I know that against 100, I have performed 150, I can internally make a target that, okay, now my target won't be 100 rupees. Now my target will be 150 rupees. Okay, so that for the sales team as well, they get an impetus and they get a driving force that, okay, so that they don't have an impression that, okay, I just have to do 100 rupee of sale, and they kind of lose their muscle power and they just do 100 rupees. Once I know that the market is accepting 150 rupees of products as well, I'll deliberately make my budget not against 100 but 150, so that the sales team are
Okay.
always on the toes.
Yeah, makes
Okay,
sense.
so it's not just costing or it's not just expenses. It's a whole business, also sales expenses, and not just that. FP&A also takes into factor your cash flow position. Okay, so for example, you predicted that my receivable position will be, for example, say 30 days. Okay, and if my receivables are increased, let's say it turns out to be 35 days, 40 days, or even 45 days. So we understand that why is it happening? Is there a possibility that we give extended credit to some customers for increased sales? Then we have to factor that. Is there a
Correct.
possibility to reduce the a receivable position by factoring invoices? So there are a lot of nuances, not just P&L, but also balance sheet position and ultimately the cash flows.
Yeah, just before everyone joined in, I was having a conversation with Nihal, and Nihal was right now doing a course on financial modeling. So financial modeling will be used in FP&A as well, right? In roles some
Yes,
similar.
absolutely. So the most common use is a three-statement model, where we basically prepare P&L, balance sheet, and cash flow for the entire company, and it's the base of FP&A. Any FP&A activity starts from that simple three-statement model.
Three-statement model. Makes sense. Okay,
Yeah.
perfect. Yeah.
Uh, to be honest, sounding like hearing from what you said, we have to predict sales, we have to predict expenses. Sounds a little bit like in-house consulting. Would I be right to say this is sort of in-house consulting for the business?
Yes, absolutely. FP&A people are consultants in a way, so you are not wrong in this. The FP&A people are definitely consultants in a way that they give CFO an idea as to how the business is performing and what kind of activities can we do to make the business better on day-to-day basis.
Fair enough. So do you see normally people that are coming from consulting into FP&A or people from FP&A moving into consulting? Just a curiosity from my end.
Yes, absolutely. So, while we come to management consulting, we'll discuss about how this FP&A
Yeah.
consulting transition looks like. But of course, your answer is definitely correct. People are moving from, let's say, FP&A to consulting, and sometimes vice versa as well. So yeah, as I mentioned, ultimately last what I was giving you example of category A versus category B. That is nothing but scenario analysis. That, for example, let's say if my revenue drops 15%, then where do we cut? Because I took a category, for example, I predicted a sale of 100 rupees, and accordingly I had budgeted an expense of 40 rupees to earn a profit of 60 rupees, for example. But then what if my revenue itself drops by 15%? So against 100, what if I did a sale of only 85 rupees? Okay. So in our example, we still see profit of 45 rupees. But the example was by very hypothetical, because in real parlance, the margins are not so much high for any business. They typically operate at a margin of say 10%, 15% on net profit. So any deviation or any drop in revenue can have a severe impact on the profits. And that's where we have to factor that if my revenue drops by 15%, what kind of cost cutting would be required to maintain our profitability. In terms of key skills required, as I mentioned, excellent Power BI, because FPNA relies a lot on data. You have to be strong in terms of commanding over the data, synthesizing data, understanding and analyzing data. So that's where tools like not even Excel. Excel is a very basic tool for that matter. Tools like Power BI, Tableau will be a lot more helpful. As we discussed financial modeling, because the more better you are at modeling, the more better you will be in terms of making multiple scenarios, using a lot of drivers as to what is the key driver that is impacting my numbers. So financial modeling is definitely a good skill. Business partnering, until unless you don't know the business, we won't be in a position to be a true consultant that is actually driving the numbers. So you definitely need to have understanding of business and the business functions, be it sales, marketing, purchase. Storytelling, lot important nowadays, because if you are just a person who is speaking in terms of numbers, then it won't help. You need to drive the story behind those numbers, as to, if for example, if my revenue dropped by 15%, then why did it drop? Okay, what are the reasons? Vice versa, if my revenue increased by 15%, then what different did we do that helped us increase this revenue? ERPs, SAP, Oracle. ERP actually depends on the company to company, as to which company are you operating. Typically, in the listed companies, the more common softwares are this SAP and Oracle. However, let's say if you somehow act as a consultant for a particular company, or let's say a startup or SME, there we have slightly smaller softwares like Zoho, Tally. Forecasting logic, of course, you need to predict how the next quarter, next to next quarter looks like, so that you keep on revising your numbers, keep on revising your budgets to reflect the real wide economic scenarios. So yeah, that's it with respect to FP&A and the career trajectory. As I mentioned, it looks like you start being an FP&A analyst or FP&A manager, then you move towards senior manager. Then in some cases there will be a one more layer of director, depending on the complexity and the size of the company. Then you ultimately move to a role of CFO. To become CFO, FP&A is one of the most chosen career path, apart from the investor relation or say accounting or say any other finance role.